Right, this is part two. I just wanted to clarify a couple of things I didn't mention in the previous video. Um, One was I wanted to, as I mentioned to you, I came into the analysis, as it were, with this being a red candle below the high of that daily high. It hadn't actually pierced the daily high at the stage I started to do my analysis. So what I clearly wanted to do was to see that high broken as well, in the correct way, as it were. And the correct way that I wanted to see that daily high broken was a close on some sort of close that signified that it had been broken, and that's the daily high, that level there. It says M1 line, but that's yesterday's high. That's why that little marker label is on there. So that was the high, clearly broken there, and it got broken and closed through on the 15-minute, which is nice, a good 15-minute candle. This was then just the pullback, as I said before, based on the Frankfurt and London boys having a little battle loading up their orders. Now, it wouldn't surprise me actually if there was a British banker in Frankfurt and a British banker in London. They're on the phone to each other saying, come on, we're going to go take this long with so many yards of, a yard is 1,000 or 1,000,000 or whatever, so many buy orders, but let's load up, let's sell a bit at the moment, push the price down, sell, and we're taking profit from this move here by taking a profit and selling. Then they load up with the buy orders as the price comes down there. They load up a few orders at a discount, comes down here, they've made a profit, they put the profit back into the trade, and it pushes the price up a bit, comes down here, and this is where they start piling on. They've turned their £1 trillion or billions and billions of pounds worth of buy orders here into sell orders to push the price down, taken their profit out. It's come all the way down here. Now, I was going to mention this as well. Everything becomes second nature because you've stared at the charts for the last 10, 11 years, and at this time of day. And this is a hammer style candle, or a doji, or whatever you want to call it, but it's for me, it's a hammer. All it's suggesting is that the buying is overpowered the selling in a huge way. They've just pushed down, and it's come up, and consequently you get this long wick or tail, as they call it, and then you can see the buying coming into the market. Now, it could easily have just turned around there and pushed it down for another go. There is no way of predicting what's going to go on with price, but I just wanted to mention the significance of the break of the daily high. So it meant that hadn't held as a resistance level. Then the push down, which I've just explained, the bankers playing their games and loading up with masses and masses of orders to make more profit. And here you can see they're just taking profit again, and they're piddling around here. And this could quite now easily blast on up, because again, this is very significant, this old daily low, the support I showed you on the previous video. What's interesting is they haven't pierced that with any sort of strength. As you can see in the converse, this is like a shooting star style candle. The converse is true of this candle here, where the buyers have pushed up, and for a whole 15 minutes they've had a fight around there, push, and the sellers have overtaken the buyers. But I always like to think of it's not humans, it's not you or me all playing around. It's just guys on the phone saying, look, we're going to do this. They shouldn't do it, it's against the law, but that's how I like to think of it. It's all rigged and fixed, all this price movement. Obviously there's currency exchanges that have to be done for businesses and the real world, but in reality this is just some sort of cash machine or computer game for the big institutions. And when I say that, it's the massive institutions and banks, not just hedge funds pale into insignificance between the five big guys like the Bank of England, say, Bank of Japan, Swiss Bank, and all that lot, American Federal Reserve. They're the big players in the market. That's what drives the market, not the retailers. So daily high was broken. Lovely bit of a bounce off that support level there after the loading up of orders, and then all my ticks, box was ticked, and that's why I took the trade. Thank you for watching. There's a lot to this, of course, but screen time is what you need to use. Oh, and now is the time that you will get sideways movement until the London Open, the American Open at 1:30, 2 o'clock. I don't like to get involved in anything until after 2, because that's when the candle closes, the hourly, which is quite significant, and the 4 hourly if you use your 4 hourlies from this time zone, which is based on the American time zone, the American close and open of the markets, which I consider to be personally the strongest. So I'm happy. 4 hours will be different on every brokers, or or across different brokers, not every broker, but this is the one that I think is in line with the way the money men look at the charts on the 4 hour. So that's it. Thank you for watching.